So we have chapter 23, which is rules governing the issuance and trading of securities. So we have the Security Exchange Commission, or the SEC, which is the federal administrative agency charged with overall responsibility for the regulation of securities, including ensuring that investors receive full and fair disclosure of all material facts with regard to any public offering of securities. It has wide enforcement powers to protect investors against price manipulation, insider trading, and other dishonest dealings. A security is a stock, a bond, or any other instrument of interest that represents an investment in a common enterprise with reasonable expectations of profits that have derived solely from the efforts of those other than the investor. Prospectus is the first part of the registration statement the SEC requires from issuers of new securities. It contains material information about the business and its management, the offering itself, the use to be made of funds obtained, and certain financial statements. Underwriter is an investment banking firm that agrees to purchase a securities issue from the issuer, usually on a fixed date at a fixed price, with a view to eventually selling the securities to brokers, who in turn sell them to the public. Red herring is a preliminary prospectus that contains most of the information that will appear in the final prospectus, except for the price of the securities. The red herring prospectus may be distributed to potential buyers during the waiting period, but no sales may be finalized during this period. Letter of comment or deficiency, informal letter issued by the SEC indicating what corrections must be made in a registration statement for it to become effective. Non-investment company is a company whose primary business is not in investing or trading in securities. A broker is a person engaged in the business of buying and selling securities for others' accounts. And insider trading is the use of material, non-public information received from a corporate source by someone who has a fiduciary obligation to shareholders and potential investors who benefits from trading on such information. That's pretty much it for Chapter 23. So Chapter 24 is antitrust laws. So a trust is a business arrangement in which owners of stocks in several companies place their securities with trustees who jointly manage the companies and pay out a specific share of the earnings to the security holders. Class action suit is a lawsuit brought by a member of a group or persons on behalf of all members of the group. Parens patriae suit is a lawsuit brought by a state attorney general on behalf of the citizenry of that state. The Sherman Act is a federal statutes that make illegal every combination, contract, or conspiracy that is an unreasonable restraint of trade when this concerted action involves interstate commerce. Collusion is concerted action by two or more individuals or business entities in violation of the Sherman Act. Restraint of trade is action that interferes with the economic law of supply and demand. Per se standard is a legal standard applicable to restraints of trade that are inherently anti-competitive because such restraints are automatically in violation of Section 1 of the Sherman Act. Courts do not balance pro-competitive and anti-competitive effects in such cases. Horizontal restraint of trade, restraint of trade that occurs between competitors at the same level of the marketing structure. Vertical restraint of trade is a restraint that occurs between individuals or corporations at different levels of the marketing structure. And a monopoly is an economic market situation in which a single business has the power to fix the price of goods or services. So that's basically it for the two chapters. A lot of good information, especially for people who are interested in investing their money in the future, or if they already invest their money now. Just a lot of good information about how that happens and what happens when you buy or sell securities of different companies. So